What's up, guys? So there's something that not a lot of people are talking about, at least not yet, that I think is a huge red flag and a signal that's consistent with a bunch of other things that are going on from a macroeconomic point of view that I wanted to share with some of you out there who are watching this channel. And what that is this interesting observation about Trump and his social media posts. And the thing that I want to highlight here that is very glaring is the fact that he hasn't really been talking about stock market performance. In the past, in his first term, it was a big point about, a lot of chest beating that, the stock market's doing well, it's part of the growing economy and all of that. But this time around, in his second term, you'll see that it dropped from more than half of his posts to actually even less than 10% of his posts. I actually think it's even less than 8% because this is a little bit dated now. But this is a very interesting point because what it's telling us is that perhaps he knows that there needs to be a sacrificial lamb in order to achieve his agenda this time around, which is to fester out the deep state, right? To cut spending and shrink government and to take the national debt under control, which is what he's doing with Doge and all the other stuff happening. And if you do that, there's no way that the economy is not going to shrink. Like I've been saying, a lot of the growth in the growth engine of the economy has been driven by huge government spending, a lot of government jobs, a lot of government projects, and a lot of that is going to get sucked out. Well, clearly the economy is not going to be growing as much as it did before. And with that will come potentially a recession, possibly stagflation if prices continue to go up, which we'll talk about. But more importantly, the stock market will eventually see that there will be a coming recession, and as it does all the time, it will tank. And perhaps that is the reason why he's not talking about a strong stock market. And he doesn't want to be caught later on saying that look at a good stock market, and then get caught with his policies that actually did tip the market over. And I think he understands that, or has been advised to understand that. And as a result of that, he's just not talking about it as much. And that is a serious red flag and something that I think you need to keep in mind as we continue to wade through all the crazy stuff that's been going on in the past couple of weeks. On this channel, I try to talk about things that are going to happen before they happen. And last week I was talking about the Fort Knox, gold audit with Doge and Trump and all that. And if you look at what's going on these days, I mean, it's clearly like, no shortage of articles about this coming Fort Knox gold audit. And I wanted to just tell you that, the weeks before that I had the episode about DeepSeek before it torpedoed the market. And, I've received some comments saying that, some of my titles are clickbaity and whatnot. But actually, I was just trying to tell you about things before they blew up, right? And actually now if you go back and look at my titles, which I haven't changed, you'll see that they're not clickbaity because it kind of happened, right? And so I just want to share with you, my audience, that I'm not trying to clickbait you into watching these videos. It may seem clickbaity because it hasn't happened yet, and I'm trying to tell you that it's going to happen before it happens. And in that sense, it could be clickbaity, but I'm not trying to like clickbait you into watching. No, I'm just trying to tell you about things I think that are going to happen before they happen, so you've got the knowledge ahead of everybody else, just like I do. Now, it is no secret that Donald Trump does not like Jerome Powell, and they had this back and forth, right, late last year, where Trump was saying, we should be involved, or he should be involved in interest rate decision-making processes. To which, Powell just came out and said, no way, right? And then so now Trump's like, I wouldn't keep him, and I don't think he's going to keep him, and Jerome probably knows that. But the point I'm trying to make here is Trump doesn't like Jerome, and he kind of does not like the Fed. In fact, there's this whole end the Fed movement going on, and honestly, I wouldn't be shocked if this end the Fed movement, which has been kind of like a pipe dream, because I mean, how are you going to really end the Fed? But now with Trump doing what he's doing, which is literally upheaving everything that we knew about the government, right? I mean, I don't have to tell you, but all this social, the crazy stuff that's been going on, it is now not impossible, or within at least the realm of possibilities that they could go on and end the Fed movement. Because honestly, what is the Fed? Like, the Fed is Alan Greenspan was known as the second most powerful man in the past next to the president because of his powers in controlling the economy, the monetary supply and interest rates. And they were never elected. Like Fed officials are not elected, right? They're just picked by the presidents. But they have so much control. And so this whole like government entity, quasi-government entity that really, if you look at who they are, it's like a revolving door in Wall Street, right? The big boys at Wall Street, ex-CEOs and whatnot, or they then go to Wall Street or whatever, is something that could end, right? And it's not something I don't think that the Trump administration, Trump himself, really likes. And I wouldn't be shocked if in the near future, right, like in a year or two, like this whole end the Fed thing doesn't blow up and actually becomes a movement and a potential reality. So just keep that in mind. Like we're in crazy times, and crazy ideas may actually come to fruition. So with Trump not really talking too much about the stock market, which I think is a big indicator actually, how does that fit into the overall big picture of what's been going on? And I've been tracking a couple of history rhymes type of charts, and so there's a couple of them that I've been showing over and over again in my episodes because I'm tracking them because they are continuing to track what has happened in the past. And until that breaks, I'm going to continue to track them. And if I've been tracking this whole thing with the inflation, right? So it went up, it went down, went up again. And most recently, right, in 2025, this green thing is going up, which mirrors what happened in the 70s. So that is something I've been closely tracking, because if this happens, and we then are at a very high risk of stagflation, not just a recession. The other thing I'm tracking, which I want to give you an update now, is the actual price action on the Dow Jones, right? So in the Dow Jones, if I blow this up over here, what happened back in the 07-08 Great Recession was we actually had this double top occur, right? We had this double top occur, after which we, as we always do, we try to like make an attempt at another high, but that's the bull trap, and then everything, comes down and collapses. Now that's what happened back in 07 and 08. And what's going on today, right, including what happened last Friday, just the last trading session, was, I was telling you, it looks like we may be trying to put in a double top here, just like we did in 07 and 08. And what led to that double top was a lot of consolidation, right, from which we sprung out from. And if, I look back over here, I'll show you, we also had this consolidation from which we sprung out from. So, now what are we looking at? Well, now we're looking at this situation where could we be actually making a double top? And that would be quite amazing, right? As an analogy or an analog of what happened before. This would have to, if this double top is true, we would have to go down somewhere near the valley. So more downside near the valley, of which we spring back up but fail to make a new all-time high, and then everything comes down. So that is the price action, at least in the Dow Jones, that I'm closely watching, right, and seeing what happens there, because this is going to give a very telltale signal of where we're going to be heading in the rest of 2025. Now, there are other similarities that are cropping up here, and I wanted to bring this one that I came across from i3 Invest. I thought it was an interesting chart here, because a lot of people, they poo-poo these comparisons because they say, hey, you can't compare nominal prices and nominal inflation and all that to the past, because now we have so much more money in the money supply. So like, you can't compare valuations from back then to now, right? I mean, we've diluted the money, so of course it can go much higher. And I get that. I agree with that. But, there are ways to still do comparisons, and one of them is through percentages or proportions, right? So even if the money supply has gone up, if you divide the S&P by the money supply itself, you get interesting charts like this, which is where, back in the .com, bubble, we had this explosion, and the S&P over M2 at that point in time reached this high, and I mean, we've basically come to a point, we're near that same proportion, right, of the S&P divided by M2 money supply. And so like, we're here, right? And this is not nominal. This is a proportion to how much money. So it incorporates how much money we've printed, and proportionally we're quite high. And back then, the internet, I mean, everybody thought we're, going to the moon because the internet's going to change everything. And the internet did change. I mean, you got to understand, back in 1998, there was not even Google Maps, right? Like, in order to go somewhere, I had to like pull out a freaking map. Like, this was like before MapQuest even existed, right? And I know the founder of MapQuest who sold it. But my point here is, like, that was the life back then. Like, there was no download stream music or Netflix or watching, like, you want to watch some video, you had to like rent a VHS tape and put it into a VHS machine and watch the movie. If you wanted to go somewhere, you had to pull out a map and study it so you didn't get lost. Like, that was the world we lived in. Forget about e-commerce and online payments, right? And so the internet promised like crazy things that we couldn't even imagine back then, right? And today something similar is happening with AI. It's like, and it is going to change everything, just like the internet did. But people conflate the changes that tech is going to bring with the valuations of these companies that are going to bring these changes, right? And those are two very, very different things. And I do think we're going to have a clearinghouse because we've gotten ahead of ourselves, just like we did back then. And there's going to be a clearinghouse, and there's going to be a reset, and then it's going to go up. And then we're going to have the technology that is, in fact, going to change everything like everybody believes it will, because it will change everything. And then we get to the Michael Jordan of investing. I love to call him that because he's basically the GOAT investor, essentially. At 90 years old, he's still the GOAT, right? And what has he, so they just came out. This is like just a day old information because he's preparing for his investor conference. But basically, I mean, his cash pile, I mean, this is nuts, right? It is at over $330 billion in cash. Now, I've brought this up many times before, and it's just continuing to go up, right? I started bringing it up like months ago, and it's done nothing but go up. And so this is like how when I saw the central banks just like buying gold starting 2 years ago, I was just like, dude, man, like, I don't need to really know or argue with people about why the central banks are buying gold. I just know that they are doing that, so I'm going to join them and buy a lot of gold bars, that is, in a vault, just like what they're doing. And that has paid out handsomely for me, right? Over the past 2 years, the gold has skyrocketed, right? Much higher than the stock market itself. And it's supposed to be a risk-less or risk-free asset, which is a double whammy, right? Because the stock market is full of risk. And this is a similar thing. Like, when you see the GOAT investor of all, the greatest investor of all time, hoarding cash like this, you don't need to argue about why is he doing it. Is he doing it because he's retiring and is, how he's going to live money to his family? I don't really care about why he's doing it. He's just doing it, right? Just like I didn't really care about trying to argue about why the central banks are buying gold. I just knew they were doing it. And this guy's doing it at huge scales, like 330 billion in cash, dude. That's a lot of cash, right? Like, straight up. And he's doing it. So it's similar to the gold thing. It's like, man, like I don't need to be like the smartest guy in the world. Like, I just need to be smart enough to understand what the smartest and most experienced people and institutions are doing, and I'm just going to follow them, right? Because who the hell am I? And that strategy has played out immensely well for me. And this is another one, right? So why is he probably thinks there's going to be a great opportunity to buy assets and other instruments at a huge discount. And so he's getting his dry powder ready, right? He's getting his dry powder ready so he can buy a lot of stuff on the cheap when the time comes. And he's probably given that order to his freaking team in case he passes on just because of his age. And I'm just going to do the same, right? In fact, I'm going to take that and run with it and even have, long volatility and short equities, because probably means that price is going to come down. Then there's not just the GOAT investor, but big shareholders of big entities. And this one happened, I think, on Thursday or just a couple of trading sessions ago. But basically, Jamie Dimon has cashed out, right, hundreds of millions of dollars of his stock in JP Morgan Chase and Company. If you look here, I think this is like 300 plus million. So like Buffett has like 300 plus billion in cash. Well, like Jamie Dimon just like cashed out 300 plus million, which is a lot for an insider to cash out in one shot, right? He did this on Thursday, of course, before the market tanked on Friday. Anyway, take what you will about that. But he cashed out, right? Like this is no joke, this amount of money. And it goes into all the different entities that he owns. But my point here is that, look, you've got big, there's a lot more. I'm just pointing out to you like the big ones, right? Like the GOAT and like CEO of JP Morgan, like people are cashing out, right? Then, it makes you wonder, like, who the hell is buying, right? And we'll get to that. If you look at companies and look at their free cash flow yield, which is a much better measure of their profitability, it's at all-time lows, right? And this is a much better, because you can't do accounting, magic to make things seem better than they are when you report your company earnings, right? And so free cash flow yield is something you can't kind of voodoo out. And the free cash flow yield is very down, right? So that means companies are they're strapped really tight, right? And these are things you need to pay attention to, because these are signs, right? There's a lot of different corroborating witnesses that take the stand in the courtroom, right? They aren't correlated to each other. They're just different witnesses who don't know each other, and they're kind of rhyming and saying the same kind of thing in the courtroom. Then most likely the thing that they're trying to tell you is true. And I use that same approach when it comes to investments and investing, right? Not only that, but when you look at what fund managers, the FMS folks basically are saying, they believe that the stock market is indeed very overvalued, which makes sense of why they wouldn't put more cash into it if they can, right? Even if they have no choice because they have a long-only fund to manage, they believe it's overvalued, so they buy protection, right? And so these again, there's a lot of corroborating information from uncorrelated witnesses in the courtroom telling you the same thing. And so for that reason, you need to pay attention, right? Now, you're not going to time it down to the minute or second or day of when this thing's going to unravel, but you got to know, right? It's very clear that the room, and I used this analogy before, that the room is filled with flammable gas, right? And you don't need to predict or know and play Nostradamus and know what the spark's going to be that's going to blow the room up. You just need to know that the room is filled with highly flammable airplane gas. The other thing that's going on in the market is this continuation of other countries not buying treasuries, which has basically resulted in higher yields and lower bond prices. And it's been going, it's been going down, right? And it went down a lot during COVID, and it's continuing to go down. And what we have going on here is when you look at, some of the largest holders, which was China, and if I include a chart of Japan, you'll see it as well. But they're just not buying U.S. treasuries, right? They're just not buying U.S. treasuries. So then you have to wonder, what the heck are they buying, right? And I tell you, as I've been telling you earlier, they've been buying gold, not buying U.S. treasuries. They're not buying, the government central bank not buying Bitcoin. That's the individuals, rich, high net worth people in China buying Bitcoin. But now they're not buying Bitcoin either, they're buying gold. So everything's kind of going into this whole gold thing, right? Which I talked about in my last episode. Then you look at what's going on with U.S. corporate credit spreads, and spreads are really low here, right? The last time it was this low was, again, 07, 08. And what this is telling you is that most likely there is a huge mispricing of risk in the lending market, right? People are underestimating the amount of risk and the cost of that risk, basically, to borrow money and to lend it out. It is a mispriced market. And whenever we get mispriced down to these levels, things blow up, right? Because then something, we don't know what, right? Again, who knows what the trigger is going to be or triggers are going to be, right? But we're just kind of sitting around here in this impossibly, calm and improbably placated market, where there's absolutely just no risk priced in. We're just waiting for whatever the thing that's going to be to come up and explode, right? And just like basically skyrocket this thing up. Look, and we'll have this kind of skyrocket, right? Like COVID, and then it's not even on this chart. So like it's 07, 08. We're probably going to have one of these moments. So again, another corroborating witness in the court telling you of what's going to be happening, and also why Trump probably has been advised, and he himself knows, not to be talking about the stock market so much, right? Finally, I just wanted to bring this up. So this is the average house price in Washington, D.C., right? And this is a precursor of things to come. This massive crash, right, happened right after, like literally a week after all the mass layoffs were announced by the new administration for federal and government workers. And where do they live? A lot of them live in Washington, D.C. And the moment that has happened, house prices just completely collapsed, right? And so the whole point of what I'm trying to tell you here is, look, we're probably going to see this type of stuff start percolating around the economy, where people in different areas of the government are going to be axed, right? And as I've been saying earlier, if you cut the spending of the government, which has been the large driver of growth in the economy, things are going to start shrinking. And it's all sorts of things. It's not just house prices, right? It's spending, it's all the projects that have been going on, and all the inefficient, if you want to call it inefficient, as Doge has been finding out, contracts that the government has been paying to all these corporations and entities, like that's all going to be coming down. And so there's going to be a shrinkage, and you're going to see things like this, other validators of a shrinkage of spending in the economy, which will ultimately tip us into a recession, which is what I believe is in the works for us. I do want to just have a quick update on what's been going on with gold. The main update is the amount of gold going into the US, it hasn't died down. We're still on this like near vertical trajectory, right? Even the daily change has been there. We're still in a near vertical trajectory, and it hasn't stopped, right? Which is crazy. And so whatever is going on with the gold market, it still hasn't resolved, right? In fact, I don't think it's going to get resolved until, well, let's see what happens. There's some crazy things going on, right? Between the Bank of England basically defaulting on its gold, and Trump saying he's going to go into Fort Knox and audit the gold there. I mean, we are really looking at a potential moment where there could be a straight up repricing of gold, where it's just like, dude, gold's repriced. You wake up one day and there's a new price of gold, which they've done in the past many times, right? The government just said, look, this is a new price of gold. Like, you wake up one day and that's it. Like, that has happened in the past. It might happen again. It just hasn't happened in recent times. That's why you forget about it. I mean, look at the gold lease rates. I mean, dude, where's the gold, dude? The lease rates are it's exploded much higher than it was in COVID even. This is crazy, guys. Something's going on, and it's going to get resolved soon. Now, I've been talking about how gold is in an early stage of a new secular bull market, and I wanted to bring one of the bull markets from the past into picture so you understand what it means, right? And what if we look at what happened in the decade of 1970, 1980, which where we had stagflation, it's a very similar environment we're entering in, even if some of the inputs are different. Like, there's no OPEC this time. We look at basically, everybody knows this chart, right? It's basically what happens. And gold followed that, and Bitcoin followed this as well in the past 10 years. This crazy cycle. And where are we in the current cycle right now? I believe we're kind of like right here, right? We've kind of like traversed this media attention. We had this first sell-off, which was when gold dipped last year, right? And then now we have this media attention, like everybody's kind of like talking about gold more and more, right? So we're around here. We just kind of like, hit the all-time high. We're probably going to have a correction, and then we're just going to have this crazy parabolic rise of gold, which we haven't seen yet, but that is coming, right? It could be helped by a repricing of gold. I mean, it could, right? But we're looking at. Look, this is crazy. It went from. Gold went from like 70 to a 900, right? So this is like over 1,000% rise. Like, I'm not saying we're gonna have 1,000% rise, but we're gonna have a significant parabolic rise, not too far in the future, right? Like, we're talking about 5x the price of gold. Like, that could very well happen. And that's why I still think we're in a very good new secular bull market for gold, and we're in the early stages of it. I do want to mention this one thing about Bitcoin, and it has this uncanny, I mean, it could call it luck or whatever, but whenever one of the main dudes like gets on the cover of Forbes, like we have this like this bad things happen to Bitcoin, right? And the last one was SBF, right, which was a terrible thing, and it just totally collapsed the market. And now we have this guy, Saylor, and this guy he crashed and burned, and I don't know if many people remember, but he lost $6 million, which was a lot of money back then in the Y2K crash, right? This guy's not new, right? He's kind of burned investors in the past. And fool me twice, I'm the fool. But I tell you, man, like, let's see what happens. But is this going to happen? Like, I don't know. But if it does, this is just for fun, right? Like, there's no correlation here. It's like saying like sharks come out when you sell ice cream on the beach. But it's interesting to note. This hack was a major hack by the North Koreans, right? And it's gotten to the point where they don't know what to do now. Like, are they going to restart the chain and just chop off and delete that part of it? Which then it wouldn't be a decentralized, operating system anymore, right? So like there's a lot of issues here with Ethereum, and my point here is we got to be very careful here, right? Because this did affect the BTC price a little bit, even though it's not affected by it. But the fact that there could be and Bitcoin, there was hacks in the past, right? I don't know if you recall, but like a long time ago, there's the whole like Mt. Gox thing. Like people still haven't reclaimed their money from that, right? So this is a thing about this digital technology, is that you could get hacked, right? It is not impossible. It's happened in the past. You could wake up one morning and stuff like this happens, even to BTC, because it did happen to BTC in the past. That's why you don't want exchanges, right? But there are exchanges. Like, so it's this whole conundrum. Like, can it not exist without an exchange, and the exchange gets hacked? I'm telling you, stuff like this happens. And whether or not you're in an exchange, if something like that happens, just the whole price of BTC itself can go down. So this is why I don't have a large proportion, even though I do have exposure to Bitcoin, in BTCs, because stuff like this can happen. Like stuff like this can't happen to gold, right? Because it's impossible to just kife out gold, because it can't. It's just it weighs a lot, and it's actually there, right? It can't just like magically vaporize into thin air. Finally, I want to talk about what's been going on with the stock market itself, right? And how I'm positioned. Now, if you look at my previous episode, I told you I didn't want to go long yet, even though what I thought was going to happen didn't happen. I thought we were going to go down, right, and retest, I thought, the CPI gap. And we didn't. We kept going above, and we even cleared the previous all-time high. And in the last week's episode, I said, like, look, even though we might do that, I'm not going to go long and close out my shorts, because I just don't think that's going to happen. I think we're going to do this, and you got to show me that we did go and then confirm that this was support now and go up, and then at that point, on that confirmation, that I would then go long and close out my shorts and take the realized loss. I, to get confirmation, want to see it break this previous high, go up, retest it, and go back up. If it does that, I'm going to close my UVXY position with a loss, right? It's okay. We're still up quite a bit for, since I started this back in August. But I'll take the hit and go long at that point. But until then, I'm not. I'm just going to keep my position with unrealized losses right now and see what develops here. We could still go back down before doing this, right? And look what happened, right? We did a peekaboo above the last all-time high, and on Friday, we just totally collapsed, right, during the day session. And so that to me is a signal, right, that this is not going to continue to go up right now, right? And that we're probably going to have, I still think we're going to test and fill some gap of the CPI, gap. And like I said in the past, I think when that happens, everyone's going to turn bearish. And that's actually when, if we do go down here, that's actually when I'm thinking I might go bullish, right? And close out my shorts, take profits, and go long, because, everybody thinks it's going to crash. And then I just don't think it's going to crash right that time. But will it go to all-time new highs and or go make a lower high. This I don't know, right? And so like this is an alien wave chart, and this could be an ABC and all the way to and this would be the 5-5, but we don't know, right? This could be A, B, C here, and this B already could be the 5, right? It could be a truncated 5, and that's it. That's all she wrote. The next high is going to be so. It could go either way. There's no way to know. And that's the thing about Elliott wave. Like I still kind of use it to kind of give me a rough guide of probabilities of different paths that could happen, like pathways. And when I was younger and I was an earlier trader, like 20 years ago, let's say 15 years ago, when I was still kind of a newbie, and I learned about Elliott wave and the constitutes economic cycles and all this stuff. I was like, oh my God, this is like the gospel. And I don't know, some of you may be young in your trading careers, or maybe you've been trading less than 10 years and you stumbled upon Elliott wave. I learned that it's kind of I thought it would map out the path, but I've been burned by it. Actually, it doesn't, right? What it's good for is it tells you what maybe potential probabilities are, expanding flats and all the triangles and stuff that Elliott wave counts bring. And I became quite well versed in it, right? But I've been burned by it because things always change, and then you always change the count, and then you retrofit what's going on with what you thought. So is it really a good predictor because of that? No, it's not, right? Because you're always retrofitting it. But what it's good at, and what I still use it for, is it's good for actually just giving you potential pathways. And I just showed you here like 2 potential pathways, right? It could be like this if we do make new all-time highs, right? That's the 5, and that's all she wrote. Like that's the end of the freaking bull run that's been going on for a decade. Or we might have already seen it, right? Like this could be the 4, and this could be the 5, right? And then we had a truncated 5 basically, and then we go much higher than 3. And then we just do that. So I don't know, right? But I'm not going to look too far from right now. I have all my shorts position, which I'm still holding, and that's the whole thing about trading. It's not about, you have to have discipline and a trade plan and your entry and exit points, right? And you have to play that, right? And I'm playing that. And sometimes it takes longer. So now my position I've been holding for more than 2 weeks, and at one point I had unrealized losses, and it was quite a bit, right? And if you're weak, you're gonna like have a weak stomach, and you're gonna get out and cut your losses and sell, and that's how you lose money, right? And so yeah, it's been a longer trade position. It's been a couple of weeks because I thought last week it was gonna go down, and it didn't. It went up, but I just held because we didn't hit my exit point, right? And lo and behold, now it crashed again on last Friday. And so now I'm going to just wait, right? It seems like what I thought my original trade plan is in fact going to transpire. And once it does, and I hit my exit point for a profit, which is somewhere around the CPI gap, then I'm going to exit there and take my profits, right? Which will be a nice and good profit, and move on from there. And that's how you have to trade. You don't time the market. You don't know exactly when and what. Nobody's Nostradamus. If they think they are, then you're following the wrong person. What you need to have is your price targets, right? And your entry and exit points. And then you let the time work itself out, right? And then you have discipline to stay true to what you thought was going to happen with the targets you've set to go in or to go out. And then that's it, right? That's the way to trade. Don't be timing the market, and don't pretend that you're in Nostradamus, because nobody is. So having said that, that's it for today's episode. I'm finally here back in Singapore. I'm actually packing now in Singapore to get ready to move into my new apartment with my family flies back in from the States. And it's going to be another one of those boxes and packing situations. But good to be back here, and look forward to the next episode. Let's see if this correction continues, which I think it will. And at which point I'm going to exit my position and collect profits. So see you in the next episode. Peace.